Staff, can we have a roll call, please? This is the audit committee meeting, October 27th, 2025.
Vice Mayor Moore.
Here.
Councilmember Mohan.
Here.
Committee Member Wong.
Yes.
Vice Chair Wu.
Here.
Chair Schmidt.
Here. Great. We've got a quorum and everybody. This is probably our first time in maybe a year and a half. We have 5 members. So we're in force. I look forward to an exciting session with everybody. So why don't we move on to the approval of the minutes? Last time we had we approved both minutes at the same time. Let's try and do that same thing again. And everyone had a chance to look them over beforehand. Then we'll just move in if there's a motion. I don't see anybody have any comments or changes to them. But let's have a motion first if we can approve both minutes.
Moore, I move to approve items 1 and 2 minutes for July 28th and August 4th.
Is there a second?
I will second it.
Okay, we've got a second. Any questions, comments? Excellent. We're moving fast on the minutes. Let's take a vote. All in favor of approving the motion? Aye.
Aye.
Aye. No, I see no. It passes unanimously, Lindsay. Great. Okay. So we didn't have any postponements, and maybe we have oral communications. I'm not sure if we have virtual attendance.
Oh, we have an attendee. We have one member on Zoom, San Rao.
Why don't we move to San Rao? And I guess that's the only one we have.
Welcome, San.
Yes, good afternoon, Chair Schmidt. It gives me great pleasure to be able to comment on this meeting. I want to congratulate the council members that supported the resumption of the hybrid Zoom meetings for not only the few commissions that had it before, but all commissions and committees. And so I don't know if the audit committee was ever having remote Zoom attendance and remote public comment before, but I want to give a shout out to all of the council members that did support this effort. I think it is a great win for public transparency and engagement, and clearly members of the public like myself that are unable to be there in person but able to attend and follow your proceedings remotely are able to do so. So I want to thank you all for that. I do want to briefly comment on the budget format changes that have been proposed and that have had working groups. I would encourage staff, as was done previously, to focus on the needs of your stakeholders, which is the council members and their need to make budget decisions.
This is an agenda item. This is for oral communications.
I believe budget is not on the agenda. Is that right? Or is it?
It's on the agenda.
It's on the agenda.
Okay, my apologies. I was just commenting on the community outreach that was occurring. And I will refrain my comments to the community outreach. I would encourage you to continue to do community outreach. However, I would also at the same time encourage you to focus on the personas that are budget aware or financially savvy enough to be able to offer you informed input on matters that affect the ability to look at data transparently by department. I think it is critical to look at budget by department and to be able to do outreach, not for solving all of the problems the community may have, because obviously you have people that don't understand finance, that don't understand budgets, and that want everything to be dumbed down. And then you have people that need to make decisions, and then you have members of the public that want to study or have a passion to study or are able to study the budget and offer you informed input. And I encourage and urge you to focus on the personas that are either decision makers or are able to offer you informed input, so that the goal of this process is to make the study more specific by department, to look at ways where cost can be reduced so that members of the public do not have to pay additional fees because of the cost recovery plan. I think the whole process of this budget review has to focus on members of the public and the cost that they bear. We are having double-digit revenue fee increases every year, and that is not sustainable.
That is your time.
Thank you.
Thank you, Sam. All right. Since we have no other oral communications for items not on the agenda, why don't we move into item 3 on the agenda? Received the OPEB and pension section 115 trust performance report for the quarter ending September 30th, 2025. I don't see a staff report here, but I do see Dennis Mullins from PFM US Bank. Dennis, why don't you take the floor and make your presentation? We are a little limited on time. I appreciate your patience with us, but
More than happy to keep you on schedule.
thank you.
If you want to.
That's
Okay. Can you go ahead and page forward? Who has the? Oh. Let's go ahead and page forward to page 8, folks. There you go. We're pleased to report that it's been a very good 9-month period where we have September 30 results. This is the asset allocation of the OPEB. Just as a quick review, you're about 65% equity and 27% in fixed income. Get a little bit of real assets and about 2% in cash. Next page, please. Always like to remind you that the fixed income portion is mostly investment grade. We do have an allocation to high yield. High yield is a great investment class to invest in using mutual funds because of the diversification. We diversify away all of the individual company risks using the mutual fund. And then the spread right now between high yield bonds and investment grade bonds is 3 to 4 percentage points. We began the year with about 3, it blew out to about 4. Now we're back to about 3. So if investment grade bonds are yielding about 4%, we're getting about 7 on the high yield bonds. And then please go to page 13. Okay, so on page 13, we get into the performance. You can see the total value of the OPEB. First column is year-to-date 9 months, net of all fees 13.66. Anytime we see double digits in a year, that's great. This is double-digit returns in a 9-month period. And the market was back up to another all-time high today. So the trend is continuing. The trend that we've seen this year is unexpectedly good equity markets. If you look at overall expectations entering this year from very smart strategists, there was a lot of caution. There was a lot of concern about the change to the new administration, the unknown about policy changes and tariffs and trade policies, and yet we have seen really strong equity returns through September 30. If you go down that first column, you can see S&P 500, 14.83. I want to call your attention to something really unusual going on. If you continue down that column, you'll see MSCI EAFE, that's Europe, Australia, and Far East. That is the benchmark for the developed foreign markets. And then the one below that, MSCI Emerging Markets, that is the benchmark for emerging markets. Those two together represent really all non-US equity markets. Notice those numbers, 25 and 27%, much higher than the S&P 500. That's a really remarkable reversal. In the last 10 years, year after year after year after year, the S&P 500 has outperformed all of the other markets. And it's also outperformed mid-cap and small-cap US stocks. Entering this year, there was no real pivot point. There was no real signal that non-US stocks were going to significantly outperform the S&P 500. But they did. And it's a great lesson in strategic asset allocation. Stick to it, and eventually these valuations will all come back, into play. So entering this year, the U.S. equity market, the S&P 500, was at about 20 times earnings per share. The non-U.S. developed foreign market was at about 12 times earnings per share. So the non-U.S. market was at a much better value, and we finally saw that pay off. So the diversification has paid off. If you see the dark blue line again, first column, total equity, that's your equities. 18% for the first 9 months. That exceeds the S&P 500, and that's because of that non-US exposure. So that's the big story this year. Fixed income returns 6.25% the first 9 months of the year. These are bonds that are yielding 4. How do 4% yielding bonds give you 6% in 9 months? Interest rates settled down. They came down. The interest rates we care about are 6 years roughly. we're investing in intermediate term investment grade bonds. You'll hear that the Fed on September 16 and 17 in the last meeting cut interest rates 25 basis points down to a range of 4 to 4.25. That's nice, but we're not invested in overnight investments. We're invested in 6-year bonds. And you can see that in the 6-year bonds, obviously interest rates came down because we made 6%, which is in excess of the yield of those bonds. Any questions about the year-to-date performance? If you go to the 1-year column, 12% gross of fees, 11.91 net of fees. And very pleased to report that your blended benchmark's 11.74. So in the last year, we outperformed that benchmark. We don't always do that, very difficult to do. About the best we can hope for anymore is to match the benchmarks. And so we're very pleased that it's been a good year. So
Yeah, I'll echo that because last year we certainly were struggling with the benchmark exceeding at times.
That's right.
Performance. So this is a very pleasant, again, consistent with last quarter, actually, that we also had a nice, very nice to see these kinds of trends.
So what is the benchmark and where to show up on this?
if you go to the previous page, page 12,
Okay,
this is your benchmark. So it is 63% MSCI all cap world index equity. And that's a global stock market index. So that takes in the developed foreign and the emerging foreign as plus the US market. And then 29% Bloomberg Barclays Global Aggregate Bond Index. And then 5% S&P REIT, which is real estate. 2% S&P GSCI. The GSCI stands for Goldman Sachs Capital Inc. Probably. That's a benchmark for commodities, 2%, and then 1%. What's the 3-month US T-bill index, which is a proxy for cash. So that's the composition of the benchmark.
So as a comment then on page 13, the next page, we've got some extra indexes listed underneath the blue rows. And what that does is give us a little flavor for different types of benchmarks, how they were doing. So even though that's, for example, the S&P Midcap 400 index on page 13 is not the Cupertino index, but it's on there for information purposes. Dennis, I have always assumed.
Yes. Yeah, the purpose of the indexes have several purposes. One, the best explanation I've heard is, and I like this one, the indexes and the benchmarks should represent the pond from which we are fishing. But there's a lot of different benchmarks, and sometimes mid cap stocks rally, sometimes small cap stocks rally, and if we're underweighted, we're apt to underperform in that period. But in the longer periods, everything sort of evens out. But yeah, we have a lot of different benchmarks on here, and you can see, the differences between them over time.
So just to scurry us along, I think that the trust pension stats are very similar to this. Unless you have something more to add, Dennis, we might close this section out. Kitty, please, Vice Mayor.
Quick question about, later on, we're gonna be looking at the investment policies. And I think it's going to impact this account. I'm not sure, but it adds global infrastructure. Do we have some performance information about what would that entail?
We haven't added it yet. We are recommending that we add a small portion of global infrastructure to the portfolios, and at that time we'll add a benchmark. The global infrastructure in the last year or so has been performing like the stock market. And global infrastructure is very interesting. I'll keep this real brief. The global infrastructure fund that we are using is investing in large part in the technology of a company that is purchasing 5G, purchasing cell towers, converting them to 5G, and then leasing them. So at the end of the day, they basically hold, if they needed to liquidate, they hold small pieces of real estate. So it's hard to quantify them, but global infrastructure is sort of an emerging part of the market.
Okay, and it's saying global, so it's not in the United States?
Mostly US, but it can be global. There is a new global infrastructure benchmark. It doesn't have a long history, but we've started adding it to some portfolios that hold the global infrastructure fund.
So when we get to the policy item, we can discuss this part some more. Okay, all right.
And one bit that I do want us to touch on, we expect to change, we can go back to the previous, well, let me highlight here first. Under the fixed income, we have the Bloomberg BARC or Global Ag. We've discussed this benchmark in the past. Kind of what Dennis was saying is our benchmark should be indicative of what investments we have. Currently, we're closer to the Bloomberg US Ag. And so for the future reports, we would like to show this as the US Ag. If you go to the second page, can we go to under the fixed income section? We actually have both the US and global ag. Go a little further down. And so you can see there. So going forward, we'd like to use that as the benchmark.
Right, we might as well keep the global on there just as it is now. We can,
Yes.
we can watch and vote. Thanks for clarifying there, Jonathan. So again, I want to move on. We've got, like, again, we'll pick up some of these questions when we do the policy again in a little bit. Any final questions on either the OPEB or the pension? I'm seeing none, so very good. Thank you, Dennis, for your report. I guess we do have members of the public out virtually that may be joining. So do we have any comments from the public?
We have no requests to speak on Zoom there.
We will move forward. A motion to, let's see, no, I think this one we're accepting. So as chair, I hereby accept for the committee and we'll move on. Thank you, everyone. So item 4 is the receive the treasurer's investment report for the quarter ending September 30th. And I do see a staff report. So why don't we, Jonathan, you're presenting the staff report today?
Yeah, I'll start off and then at the end, we'll kick it off to Carlos with Chandler. So again, this is for our investment report for the quarter ending on September 30th, 2025. As you can see here, these are our various cash and cash equivalent balances. The Wells Fargo, we have 2 balances that you can see some significant change, and I'll go into some of the detail that's behind the operating checking account in the following slide, but that decreased by about 45 million-ish. And like I said, we'll touch on that in the following slide. The lay for local agency investment fund, that one did increase by about 800,000. The invest with Chandler, that increased by nearly 30 million. 30 million. And a large part of that is due to a transfer from the operating checking account to investments. And we'll go into a bit more detail on that the following slide. And then lastly, our PARs or a restricted for pension trust, and that increased by just over $1 million for an overall decrease of about $15 million. And again, on the next slide, we'll go into a bit more detail. So over the quarter, we have large disbursements at the beginning of the fiscal year. First being for our CalPERS unfunded accrued liability or UAL. For $3.6 million. And this is a payment we make to CalPERS. And we save about 3.5% in interest if we make a lump sum payment rather than pay it over the course of the fiscal year. Second, we made $2.1 million payment to Plan JPA, which is our insurance for annual liability and property. And again, that was done in August. And lastly, the biggest change that occurred between Wells Fargo operating account and our Charlie account relates to this transfer of $27.8 million. And this was made possible with a refinement to our cash flow model. So we, in September, we implemented a new model, or a model that was developed by Irene. Here are finance's intern. Concurrently, while developing this model, she's also been working with the cash flow policy, so that as we're moving along, the two can mirror each other. As part of the, as you know, the internal audit work program, Baker Tilly will be reviewing the policy. So as we were moving through this, we didn't want to get ahead of ourselves and develop a model that did not really align with our policy or vice versa. And so you'll see some policy updates coming soon. But again, this was made possible due to a heavy lift by Irene to develop that model. So brought her here to.
Thank you, Irene, on behalf of our committee. We appreciate all the work you're as an intern doing. So thank you.
And so with that, it'll kind of give us a bit more command of our cash on hand. So in time, if you can go back, we'll refine some of the model. And so it's just going to take a bit of time, and hopefully we scroll back actually to the previous page. Currently, our operating checking account is at 2% of total portfolio. We do want to drop that down probably by to another $2 million or 2.5, so that we will hover around $2 million of funds sitting in our Wells Fargo checking account. Again, it's they're sitting idly, but it is accruing interest at 3%. So it's doing something. Just it's not doing as much as what Carlos and his team can do with at Chandler. Okay, and then let's go to the next page. And lastly, all investments are in compliance with state law, and the city has sufficient funds to meet its operating needs for the next 6 months.
So let's move to Carlos, and then we'll have some questions if we have some from the.
Welcome, or take it from there.
Sure.
Up to you.
Thanks. Good to see you in person, Carlos. We usually see you on the screen nowadays, but.
It is nice to see you guys in person. So before I turn into, maybe we can put the presentation, you've got it on there. While you get it up there, I can just keep my comments brief. Just a reminder that these are your operating funds. So it's unlike your post-retirement medical trust that you have with our friends at US Bank. This is a different type of investment. The objectives are mandated by California government code. Those objectives are safety, followed by liquidity, then followed by return. These are operating funds that you use to make payments like CalPERS and all the other operations that you have. So they have to be kept very safe. And of course, it's mandated that you invest them in high credit quality fixed income securities, generally 5 years or shorter. There are instances when you go longer, but generally your 5 years or shorter. This is an actively managed portfolio. We don't just simply purchase a bond and clip our coupon and collect our income. It's an actively managed portfolio where we may sell out of some securities before maturity if we think that there's an advantage to the portfolio to do so. We do have a strategy. That strategy is to invest primarily between 1 and 5 years with a duration target of approximately 2.5 years. So everything is always built around that strategy. Every bond that you have in this portfolio is, of course, it has a reason for being there. We're not just buying it because the yield looks good, but because it's furthering the duration to where we want it to be, because we're rebalancing asset classes to where we need it to be, or because we're trying to generate some sort of return or some outcome down the line. So having said that, unlike your longer or longer term portfolio that you have, very well diversified amongst different asset classes to address retiree medical and pension type assets, this portfolio is again focused on fixed income securities. And what am I trying to say here? What I'm trying to say here is that unlike the longer portfolio where you're driven by valuations of companies and different sectors of the stock markets, this is primarily driven by where interest rates move, and interest rates move around where we think the economy is going to be. So having said that, I'm going to spend about 1 minute talking about that, and then we're going to move on to the actual portfolio. So the key takeaways, of course, are that the government has shut down. This is, I think, now the second longest time period where the government is shut down. That, of course, has an impact on fiscal policy over the long run, not so much over the short run, and investors are keenly focused on where that's going to end up. But yes, on the political side, but also just on the fiscal side. How long will we be shut down? How long will it be until government workers get a paycheck? What kind of an impact will that have to gross domestic product and economic growth in the United States? The second factor, of course, is that as the government is shut down, there are key economic data that are released by government agencies, and we're not getting those. So when the Federal Reserve is making decisions on how to move the economy along with stimulation in the form of lower interest rates, they're kind of flying a little bit half blind. The two key metrics have been that people really focus on, that of course the Federal Reserve has as part of their mission, is to control prices and to promote employment. And the price, we got a little bit of a reprieve because that was a delayed number. It was released last Friday. The inflation, the consumer price index, that's an inflation measure, was released. It came in a little bit lower than anticipated at 3.1, but certainly elevated from what we've seen over the past year. It just tells you that inflation is a little higher than what we expected it to be, but not as bad as we think. The second piece, of course, is the employment number. I think you're all aware that the first Friday of every month, there's a release from the Bureau of Labor Statistics giving us the change in non-farm payrolls. We have no idea what that looks like because it hasn't been released. The last number was a below expectations number. It's just been shadowing or foreshadowing, I should say, a trend that we're definitely looking like we're at the end of the business cycle. Things are slowing down. The economy is in need of a little bit of a stimulus, which kind of gives more fuel to the Federal Reserve lowering rates. The Federal Reserve did lower rates in September by 25 basis points. It's expected that they'll do that 2 more times. That will have a dual impact on your portfolio. Remember that these are fixed income securities, and you make money in 2 ways. You're collecting interest income, of course, and then the fair value of the investments gets booked into through your accounting. So having said that, lower rates means that into the future, you're going to be reinvesting at lower rates. You average about 2.5 years. You have investments from overnight all the way up to 5 years. But as those rates come down, it'll take a while for you to reset lower because you follow a longer duration strategy. The returns have been good. I would estimate that about 2/3 to close to 3/4 of your return came from interest income because you've had some great yields. The rest of it came from fair value appreciation. We capture that in the return numbers, whether that was realized through a sale from maturity or not, even if it was just booked on paper to show you just giving you a holistic view of the portfolio. That's called the total return. If we turn to page number 17, I can give you an overview of the portfolio. As of the September 30th, the portfolio was at $205.1 million. You were earning an interest income of, let me rephrase that, a yield to maturity of 3.32%. That is the interest income that you are due to earn into the future, assuming that nothing changes. That's on an annualized basis. Obviously, when we reinvest, we're going to be reinvesting at a lower rate because that's what rates are available in the markets today. So gradually that should come down even more. You can see from 3 months prior that it's already come down 373. The market yield is the yield you would get on the portfolio had you invested it on the date of this report. That's 338. If you think about it logically, if I'm going to reinvest any cash that looks like this strategy, like this portfolio, it infers an average rate of what I'm going to pick up with those new investments. So you can infer a reinvestment rate. That reinvestment rate again is lower than it was 3 months ago. It was over 4%. And like I said, that has had a dual impact. It means that the portfolio has a higher valuation. It's grown in value, but into the future, your earnings will be lower. I do want to highlight a couple things on page 18. We still, when you're at the end of the business cycle, when financial conditions are uncertain, when we have uncertainty due to fiscal policy and tariffs, and then of course just volatility in the markets of what's really going to happen, we tend to trend towards high credit quality. We always buy high credit quality. We just go up in quality whenever possible. So the bulk of your portfolio is still in Treasury securities. That's the first thing I wanted to note. The second is, of course, you have a sizable cash position. That's that infusion of cash that came in from staff. At that point, we hadn't started investing it yet. It just got captured in the reports right at quarter end. If you look at that a few weeks later, you'll see that gets diminished. And of course, we diminish that gradually, incrementally. If you turn to page number 24, you can see the return for the last 12 months ended September 30th was 441. As I said, about 2/3 to 3/4 of that number came from interest income. The rest is being fueled by fair value appreciation, which has been fueled by lower rates. Rates have been falling, causing your investments to go up in value. The last three months ended September 30th were 130. When you look at the net of fees, it's 129 for the quarter, 441 for the year, 433 for the portfolio. You're clearly beating the benchmark on a before and after fees basis. I would tell you that that this portfolio is structured right now and performing as designed. We don't anticipate any big credit stories. One thing to keep in mind, of course, is that there were two banks lacking any other economic news that can be had by investors because of the government shutdown. Investors have been focusing on whatever else is out there. The two big news that came out were two bankruptcies. First Brands, which is an auto parts supplier, and their off-balance sheet financing and some questions regarding that. And the other news, of course, was due to Tricolor, which was an auto lender, basically to a lower tier credit. And those two bankruptcies, it makes some investors question, are we going to have a bigger credit issue? You've got some bankruptcies going on. Our observation and our analysis right now from our credit team is that's probably going to be limited more towards a regional banking level, which is generally a banking sector that you don't hold in your portfolio, nor do we think that this is a malaise that's going to spill over to the rest of the investment grade credit world. Apart from that, you're doing well. We always look forward to the values going up, but of course, the income will come down. Income hits your budget, the values don't. They hit your year-end financial statements. Combined, they're a good story, but from a budget perspective, I would budget just slightly lower for next fiscal year. Any questions?
Yeah, but why don't we include this section for clarifying from the committee members for either the staff report or Carlos's excellent and succinct presentation. Place here, any vice mayor's got one.
Yes, so there's, I'm seeing three different accounts, the 10659, 163, and 10664. And
Where are you looking on the reports?
in the report, it's PDF page 95. You'll see the account balance for account 10659. And then on PDF page, so that has a balance of 205. And that's that.
Have a, I'm sorry to cut you off, a channel report number?
I think she's looking at pages 17, and I think she is also referring to page 26, and then of course page 29, and I can walk you through those.
Okay, so I think the first one is the standard Chandler account that we're used to, the 10659.
Correct.
Okay, the next one, it went from 120 million for June 30th. It's at 75 million, September 30th. That's 10663. I think that's OPEB and pension, not sure.
Not quite, but you're kind of along the right track. So that's if you note at the top of that, it's titled the reporting account. Those are assets in the operations bucket of the city, so it wouldn't include OPEB and other. Those are separately managed and separately held to their own investment policy. These are other operating assets that the city would rely on to make payments and things like that. But those are not assets that we manage. We just simply report on them on your behalf so that you have a place to see them all together. So that would include LAIF and it would include your bank account.
Okay.
And then the third, which you also referred to, is a consolidation of the two.
Okay, because I was like, where's all that money?
Exactly.
Darn. Okay, all right, thank you.
Good. Any others? Sure.
I had a super general question. When the rates go down, does our benchmark change?
No, the benchmark, I really like the way you said that earlier. It's a pond that we fish in, and that's exactly right. The benchmark is an indication of the market in which you're investing, the amount of risk that you're taking on, and it provides you an expectation of what kind of return ballpark you should be getting. So as interest rates shift, that's a market shift, but it's not shifting the amount of risk that you're taking on in this portfolio. Of all the types of risks that you're taking on in this portfolio, the largest one that I would identify is duration. Well, it's market risk. Okay. Default risk is big because people are worried if a company blows up and they're not able to pay back their debt, then of course that's a bad thing. But the bigger one that impacts the portfolio return on a day-to-day basis is your duration, which I talked about 2.5 years. Your duration is a measure of how your market value in your portfolio is impacted for a shift in interest rates. Let me rephrase that. For a market shift, for interest rates falling or rising, that duration number lets us know how that market value will change. And that has the biggest impact on your return over the long run in a fixed income portfolio like this. So as interest rates go down, your duration informs us how your portfolio will be impacted, but we are still maintaining a similar level of risk. We have a way, we have permission, we have the ability to shift that duration slightly shorter or longer, depending on where our analysis is telling us where rates are headed. But we primarily constrain it, because if we make a wrong call on that, it can have a very significant negative impact on the portfolio. And remember, this is safety and liquidity. So we tend not to move very far from that target. We can drift our duration, the duration of the benchmark actually found on page 17 is 2.48 years as of September. Yours is 221, but that's only because of that cash infusion. If you look at the prior quarter, it was a 254, and we're working to build that back up to somewhere around the 2.5 range. Our call right now, and it has been since the fall of 2023, has been to be slightly longer than our benchmarks, because we've been anticipating rates to go lower. And indeed, if we take a look at page number 13, the chart on the left-hand side will demonstrate that that's exactly what's happened. Rates have been falling. We've been sort of in this end cycle of investment of the business cycle. And we're at a point where the Fed has to step in and stimulate. But just because that's happening doesn't mean that we change the benchmark. The only thing that would change the benchmark would be if all of a sudden staff came back to us and said, we're needing too much cash flow out of this, and we need to hold our money closer to the vest, shorter, more maturities coming in. So then we would visit a shorter benchmark. Or the city came back to us and said, you know, the level of volatility that we're experiencing with this approach is too much. We're not comfortable with the volatility of return. We need to ratchet back the risk, so shorten it. That's the only period that we would look at something different. Longer is a little tougher. I've never yet run it across a city that has investments significantly longer than 5 years that can actually support their operations. That was a lot. I apologize, but I hope that answers your question.
No, it does.
Thanks, Carlos. Hanyan's.
I have kind of a follow-up question. I was gonna ask, like, in this like falling interest rate environment, you know, what do you do anything differently? I think you kind of addressed that in Sheila's question. Another question is like, what is the spread between what's in Chandler versus like the checking account that you mentioned? You mentioned 3%?
Yeah, so we out of our total portfolio, which would include,
I think you were showing like you moved a bunch of cash from the checking account, Wells Fargo checking account, to the Chandler account.
right,
I'm
26.
curious, what is the spread between like what, you know, Chandler is yielding versus the checking accounts?
So currently, and Wells Fargo can change it at any point, but they did inform us that they were going to hold that 3% through to June 30th, 2025.
3 months ago, we were reinvesting at a 4.03.
Okay.
Today, we're reinvesting at somewhere around a 3.38.
So we still have at least 0.3 or 38 basis points that are challenged. I don't know since then if you've had an opportunity to invest in other opportunities between as of September 30th to today. So it's kind of dropped down since then, but it could have been at least 0.38 basis points.
The rates aren't static. They move, as you're aware, and some days are good, and sometimes we wait. We look at the yield and determine we should wait for this release. Not that there's much of a release these days, but we may wait for an event, or we're looking geopolitically. This is sort of our secret sauce. We make these decisions and we may hold off. The one thing that I will highlight, and I want to bring you back to page number 13, is that there is still an inversion of the Treasury yield curve. If you look at the right-hand side chart, which is coming in just a moment, this is the term structure of interest rates from from 3 months in this chart all the way out to 30 years. We're just looking at a yield relationship between shorter treasury securities and longer treasury securities and how much yield they're providing. Logically, you would normally believe that a shorter, when you're lending your money out for a shorter period of time, you cannot charge as much interest as you can if you're lending your money for a longer period of time. Longer investments, longer loans are generally carry a risk premium because there's more time for bad things to happen and you want to get compensated for that. There's also more time for good investment opportunities to roll by that you're going to miss out on because you're invested in this investment. And you can see that there's a next page 13. There is an inversion of the yield curve. If you look at the right-hand side chart on the left side, the left-hand side of the right-hand side chart, there's a kink. That's called an inversion. And that happened for, I can get into the economic reasons why we've talked about them over the past 2 years. I won't. But what I want to say is that is giving an advantage to short-term investments right now from a yield perspective. And you would think, well, why don't we just pile into those shorter investments because we have more yield? But what I can tell you is that if you look at where that was a year ago and even 3 months ago, it was much higher than it used to be. And because they're shorter, they reinvest. The money comes back to us to reinvest faster. And you can see that we would have had to reinvest at a lower rate. When you buy the longer investment, you're actually picking up something longer or higher and hanging on to it for a longer period of time. There's a break-even analysis that's part of what we do to make sure that we're making money at the end of the day versus what's happening.
Thanks for that, Carlos. Hope that helps a bit. I'd like to bring us to a closure of this segment with a question for the staff on the staff report. It's kind of a philosophical question, but to me, if we look at page 2 of the staff report, there's a comparison. I like comparisons between the September 30th balances on the general ledger for cash and investment versus the June 30th, 2025 general ledger balance. But when I look back at our previous audit committee report for June 30th, $5 million difference. So typically I have talked to staff till they're sick of hearing me describe this, but I kind of don't want to page back to the previous reports all the time because I assume they're going to be equal to what's shown unless there's some qualification. And there could well be a qualification in here. That's why I phrase it as a philosophical idea. Maybe Jonathan, you can shed some light for me on. Can we assume that prior numbers are static on future reports and maybe even on this one if we understood the report?
Certainly, and it's a great question. And in theory, if we're able to close out our books quickly and on time, before we issue this report, it should remain static. As it was the end of the fiscal year and we were still in the process of closing our books when we reported out, there will be a variance, and we should have highlighted that here, and we'll include that as part of what goes to council, kind of identifying what was the difference. Most of it landing on the general fund, and that was due to some transactions that had yet to post, and so there were reconciling items that had yet been processed. So we'll identify what those amounts were, and we'll include it in the staff report going to council.
Super, that answered my question. And I know we've got this, of course, there's going to be changes to the general ledger or adjustments after a particular report. So that was what I was hoping I would hear. Why don't we move to comments from the public, or if there are any, Lindsay?
We have no hands raised on Zoom, Chair.
Outstanding. Although we welcome public comments, we are up against the gun on time today. So why don't we move to a motion? And I've got a question for us as a committee. It says our action item is we receive the treasurer's investment report, and my question for us is, can we recommend to city council that we accept it subject to modification that Jonathan's just mentioned? Or should we just accept it, in which case we can move on? I'm comfortable either way, but it's kind of 2 city council members here. Is it of any use to?
I don't think so. What you're suggesting is excellent.
Okay. Everybody's okay with that? Why don't we have a motion to that effect if that's
So moved.
okay, so moved. So Lindsay, were you able to capture that?
No, I need a second.
Is there a second?
A second.
Okay, Hanyan seconded. Any discussion, comments on the motion? All right, well, we take a vote. All in favor of that motion? Aye.
Aye.
I see it's unanimous. Lindsay. Excellent. Thanks, everybody again for the very statement. I appreciate your in-person visit this time.
Absolutely, thank you.
Moving on to the agenda item number 5. We've got the, received the internal audit and the internal audit fraud, waste and abuse programs update. And then I saw Chelsea there earlier. Welcome, Chelsea.
Thank you. Thank you. Very nice to see you all today. I will share my screen and we can begin looking at our internal audit status update. Can everybody see my screen?
Not yet. Yes, now we can.
Oh, perfect. Okay. So we still have one outstanding project for last fiscal year, and that's the grant management internal control review. I'm happy to report that we actually provided a draft report to staff today. And so by next audit committee meeting, I'm hoping that I will be able to present this to you all. So wrapping that one up really quickly here. So then that brings us into our current fiscal year, 26, and looking at those projects. So number 1 is the council-wide policy review inventory. We were able to initiate this project. We had our kickoff meeting already done, and we've sent a document request list to staff. So, activities for next period, we're going to continue to assess the received documents and schedule those relevant emails. This is a fairly large project, and it's going to take us, we estimate, between October through February. So this will be another status update next time around. That takes us into the investment cash flow policy and review recommendation. So this was supposed to take off in October. We were hoping to finish in January. We have initiated the project, but we're still, I know that there's a lot going on for poor Jonathan right now. And so I think that we're going to receive the investment policies in the next couple of weeks. So that's really when our work will continue and we can move forward. The citywide internal control review, this is scheduled from November through February. We are on track and ready to start this project next month. And we'll be happy to report back some of our I guess, improvements and whatnot sometime by the next audit committee. And then last but not least, we have our ongoing internal audit services. This is, a plethora of different things, really having me come here today, as well as helping monitor the fraud, waste, and abuse hotline and looking at audit validation. So going into our fraud, waste, and abuse hotline statistics, we do show you what has happened quarterly. And so there was one complaint that we received this quarter. It was an employment matter. We referred it to appropriate city officials, and that has been closed. We do show you, like usual, our total reports that we have had from the beginning October of 2022 when we started this program to present. And we also show our outstanding reports and how many of those have the days outstanding associated with them. Is there any questions about anything I've reported thus far before I move into the validation stuff?
I can kick it off, Chelsea. You'll remember from previous meetings, we often ask you about the ones on the far right bottom. The outstanding report stays open, and there's a lot of confidential information. And I was thinking about when I looked at it, what is an outside person might I wonder about a 607-day outstanding, and we talked that you can't disclose because there's NDAs and other issues, but I wonder if we could have maybe an asterisk or something. If somebody looks at 107 days outstanding and then a few others, it maybe a little asterisk would say, well, these are all being looked at in accordance with the city's policy, whatever that may be. That may be available for a link that they could look at or something. And it's not like we're not paying attention to these things, although we as the audit committee can't do much about them other than ask you this question. What do you think about a footnote? Is that, or city staff too, if you have a thought on throwing it out?
Absolutely. I think that's a great idea, and definitely shows the due diligence on Baker Tilly's side as well as city management side. And so we can next time have an asterisk, and I can also let you know the last time that Baker Tilly followed up with city management on these outstanding reports, because that is happening, frequently.
Super. I appreciate that. Any other questions for Audit? Excellent. Yeah. Councilmember.
It's clear to me, I'm not sure it's clear to everyone, but the total reports are 38, reports closed are 28, open are 10. So the the columns on the right side are directly associated with the 10 open ones, right?
Right.
Correct.
Okay, so the most recent one is outstanding for 95 days.
That is correct.
Okay, so there is no open claim that is less than 3 months old.
Great. We had one open claim, or we had one fraud, waste, and report received this quarter, and it closed this quarter. So these your open outstanding reports are all from prior quarters.
Yeah. Okay, thank you, Chelsea.
Yes.
Chelsea, I don't see any other outstanding questions right now that we have as a committee, so why don't we march to
Really quickly, let me show you the audit recommendations. This is part of that ongoing report, our ongoing services that we provide the city. I'm happy to say that there are 49 validated recommendations. We were able to close one recommendation that had been outstanding this quarter. So there is 29 open recommendations left. And this was the finding that we were able to close, and it was around governance. Any questions about the audit recommendations?
I have a comment. I really like this. And I know you started presenting this, I think, at our last meeting. So it's nice to see this as a recurring report, and I think we may over time find it very useful.
Wonderful.
Why don't we move to see if there's any public comment then? Lindsay?
We have no hands raised on Zoom, Chair.
Outstanding. Oh, we welcome. Okay. Our action item is to see this report. So I appreciate the quality work, and I hereby declare we've received it. Thanks, Chelsea.
Thanks, everybody.
Okay, item 6 on our agenda. Action item is to review and accept the OPEB and pension trust investment policies. And I'm looking at a staff report here. Jonathan, you want to kick it off?
Yeah, so for the most part, the OPEB and pension policies will remain unchanged. The one bit that we are proposing is the inclusion of global infrastructure to an asset class. Did notice just now that there was a paragraph kind of highlighting what the reasoning behind including that asset, and went ahead and included here that somehow fell off the staff report, which should have been. It's like, well, why is it there? And when you were asking the questions, like, oh, let me go back to the staff report to find out. Yep, it was missing. So let me quickly go. So again, this is the infrastructure is to kind of diversify some of our asset classes or have the ability to invest in other options. And included in there, we would be providing this snippet in our staff report to council. So it provides that reasoning, but I have Dennis here who would provide a more robust response to or a comment as to why global infrastructure should be included as an asset class.
Yeah, very quickly, these new asset classes form over time. And in the industry, global infrastructure has emerged as a new asset class. And as it's sort of coming alive here, we see it as something that, just as it states up here, inflation hedging, which means that in periods of high inflation, it ought to do well because it's mostly income producing real estate. Stable cash flows and historically low correlation to traditional equities. That's the brass ring for which everybody's reaching. Can we find an asset class that will not perform just like equities? Because if it performs just like equities, just buy stocks. But if we can find something that might go up and the market goes down, that's what we're looking for. That reduces the overall volatility of the portfolio over time. So that's why we like to see it. And as part of this, what we'd like to do in the investment policy is add this as a permitted asset. Merely state, global infrastructure under alternative assets, and then put it in the table with strategic asset allocation, with a 3.5% target to be funded from currently in both real estate and commodities. So right now, real estate plus commodities is 7% target. And we're recommending that be 3.5% real estate and 3.5% global infrastructure. We have no interest in commodity investments right now. And I'm not sure we will. Very quickly, one of the reasons for that is because commodities are so hard to invest in. The only way we can invest in them with liquidity, the ability to get out, is investing in a mutual fund that is itself investing in commodities futures contracts. And they don't have a really good track record of making money. That's a very difficult thing to do, very high cost. So you can see here, we're recommending, we're going to take commodities to 0, real estate to 3.5, global infrastructure to 3.5. So really a minor change to the overall mix.
Why don't we move to questions unless Jonathan, you got some more to add?
That's
I see the vice mayor's got one, or Councilmember Mullen. Go for it.
So my question was, since this global infrastructure is a new asset class introducing, does it mean that in the past we could not invest into this class?
Yeah, good
Did it
question.
not fall into one of those other?
Correct. Yeah, 10 years ago, there were no global infrastructure funds. So they're sort of a new animal. You could ultimately invest in something similar to it by investing in real estate and technology. But now this is sort of an industry that is sort of half real estate.
So it's something new that's
It's something new.
term for
Yes.
all investments.
Yeah, just there were no global infrastructure funds 10 years ago, and again, 5 years ago, I think they were all so new that we didn't really have a great level of trust. But now we feel very comfortable.
Thank you.
I'm not sure I understood the example that you had, but it sounded as though it could be investing in domestic property, basically the poles that a 5G network might want to use to install their hardware, like what we're seeing in Cupertino. We've got Verizon here. Is that the sort of thing you're?
Well, and forgive me, I probably glossed over that too quickly. We had the fund managers from one of our preferred funds come in and talk to us. And this was a year or so ago, and we basically said, what is global infrastructure? What are you investing in? And he explained at that time, the majority of the fund, so over half of the fund, was invested in companies that specialized in purchasing purchasing cell towers all over the country. They then go to the cell tower, they replace all the technology, bring it to 5G. Now they own it, and then they turn to the cellular and wireless carriers and say, we can either sell it to you or we can lease it to you. So that's a very profitable business. So that's about half of it. The other half is global infrastructure in terms of massive construction projects, highways and bridges. One thing to keep in mind there is a lot of the money from the American Rescue Act, which was passed under the Obama administration, is still not spent. And it's in the pipeline. A case in point is, there's a bridge in Cincinnati I happen to be familiar with. It's across the Ohio River with two interstates come together. Massive infrastructure project. It'll be in the billions, and they're going to start turning dirt on that early next year. It's already in the pipeline and it's coming, it's allocated at the federal level. That's not the only one. There are several other projects like that. So if we can invest in those projects and the companies that are getting those contracts.
So I can understand the investing in the companies that are getting the contracts, but I don't understand how you can, if the government is funding it, I don't understand how you can invest in that bridge.
By investing in the stocks of the companies that get the contract.
Okay,
Yeah,
so I get that part, yeah.
These massive construction.
So Caterpillar, John Deere, that's
Very good example. Yeah,
okay.
yeah, that'll flow all the way up the vertical. It'll flow all the way up that industry. Absolutely.
Okay, so looking sort of internationally at my only concern, because global infrastructure could be building a massive refinery. Is that something that we're interested in funding or supporting? So there could be investments like that that really aren't things that we want to be supporting.
There definitely could be. With mutual funds, we have limited ability to carve those out. It is 3.5% target of the portfolio, relatively small. It's not the core of the investments that we're going into. But yeah, with the mutual funds and ETFs that we're using as vehicles to invest the pension and the open, we really have limited ability to target industries or things of that nature.
Okay, so we would have to, as a council, determine some sort of direction for investing if there's classes, or I should say sectors, that we're not interested in, or that we are interested in. I don't know if there's an interest at this point from the whole council to look into that. But there's been some questions about some of our investments here and there. So when it says global, there's always a little concern of if it's going to be an investment in a particular country, do we agree with their politics?
Right.
Those kinds of things.
Yeah, that's something, we're very open to that. If you have concerns at the council level, share those with us. We'll kind of screen through the portfolio, see what we can do, report back to you and say, here's what you're invested in. If we want to exclude something, here's the way to do it, or we'll be honest with you and basically come back and say, it's really, but we can certainly take a look at that.
Yeah, so basically anything that would put us in the newspaper for investing. Good.
Right.
Thank you.
Yeah, headline risks.
Yep.
I have a quick question. So between real estate and global infrastructure, are any of the companies in those portfolio like in the AI data center build out, like or whatever, like the big techs are subcontracting, like
I'll have to report back on you. I have not had that question before. That's a good one. I'll find out what portion of the real estate. Well, NGI, yeah. what portion of those are supporting data center construction? Yeah, that's becoming, I think that'll be one of the next big controversies. That's a good question. I'll have to get back.
And I've got a philosophical question about this table. It's all very nice. But I just heard you say commodities in the near term, it's, correct me if I'm wrong, but, to me, that doesn't seem like a major category that the city should be investing in, and for historical reasons, it's there. But I see there's all sorts of other asset categories, or whatever we want to call them, on the next couple of pages in the policy. And wouldn't it make sense to maybe simplify this little table instead of having a bunch of assets? Because we do have on page 3 or 4 a whole bunch of assets that may not at this point have as a target. So is it something where you prefer? I don't want to suggest limiting. My question relates to how much are you limited by having that table list specific assets that are otherwise also listed on page 3 and 4? Do you need to have it on there in order for you to feel you've got to go ahead?
I think it's good to have the table because it really does a good job of setting the expectations. And this isn't limiting in any way. This is very low.
Right.
You've, for instance, we've listed probably 10 or 15 different types of securities and we'll only purchase, maybe half of those.
Which is why I was thinking commodities would be like that. Why do we have to list it separately? It's 0 anyway.
I'd be more than happy to just cross it off.
But it's still listed on as a permitted asset.
Yes.
In the future, change your perspective. So I guess that's my question is, why don't we just have 2 or 3 categories like the equities, the stocks, and the other, or alternative investments? Anyway, maybe my question is, does anybody object to getting rid of the commodity line to simplify the table somewhat? Who wants to invest in commodities here? Well,
Not me. No, but I was going to suggest the same, actually, to remove commodities, given that it's not aligned with the investment objective. But my other question was, Dennis, is it correct to say that global infrastructure could potentially be a subset of equities, given that we're not investing in single names and we're investing through funds and indexes?
It certainly could be a subset of equity, but it's been broken out now, and this is just sort of becoming commonplace in the industry. And so we're, so this isn't just something that we are doing. It's really the whole industry sort of going that way.
And then the other question is whether we wanted to include whether the global infrastructure could only be invested in funds and through indexes and not individual names as a consideration.
why don't we move that question or discussion to a motion when we get a motion? We have in a second. Any more questions? Staff or Dennis? I think we're good on that. Lindsay, anyone from the public asking to speak?
We do have one hand raised on Zoom share.
Excellent. Who's that?
One moment. Welcome, San Rao.
Yes, can you hear me?
Yes, we can hear you now.
Okay, yeah, I did not see the pop-up with the unmute options, so I guess I was welcomed without the unmute pop-up. I do have some comments here. So my first comment is that the reporting obligations require that the quarterly reporting includes the year-to-date rate of return. And I want to point out that the report that was received earlier does not have that. What you're showing in the reports are yield, which is less interesting when it comes to the equity section or the equity summary. So you're showing current yield and you're showing annual income projected, but you're not showing the rate of return on a year-to-date basis in the quarterly reporting. I just want to point that out. My comment today on this section of the agenda is going to be two things. One, I want to point out that in the policies under the equity investments, you are not allowing the investment in ETFs for equities in the US markets. You're allowing for equities in the emerging markets, but in the US markets, you're requiring mutual funds. And I want to observe, as Chair Schmidt probably knows well, that ETFs are a lower cost investment compared to mutual funds. And for consistency reasons, perhaps this policy is outdated, but there is no reason to not allow ETF investments in the US markets. The second comment that I have is I would like the committee members to consider a motion to amend the policy to move single stock investments to prohibited investments and only allow investments through instruments such as ETFs and or mutual funds to protect the interests of the city so that diversification is maintained. While the chosen vendor may choose to diversify through single stock, I believe that unnecessarily complicates the investments. And if you look at the rate of returns, the returns have lagged the S&P 500, they have lagged the total market investments, they have lagged the technology index, and we could go through any number of indices. So I would like to urge the committee members to amend the policy to include ETFs for the US markets and to prohibit single stock investments. I would further urge the committee members to reject the recommendation on global infrastructure and instead to consider a more simplistic investment policy that invests in the total market for the US market, such as a VTI ETF, or the total global market, that is a VT ETF. So consider VTI or VT. Right now, the investments are grossly underperforming all indices. And so I urge you to really simplify these investments and prohibit single stock and encourage and require ETF investments primarily, unless there is reasons not to do that, and to certainly not have to invest in single companies for the infrastructure. Thank you.
Thank you, San. Lindsay, are there any others?
We have no other speakers on Zoom, Chair.
All right, we'll close out the public comment section then, and what I'd like to propose is that we maybe have a motion here, and then we can deliberate on it. Or here, I guess what my concept, again, this is one of those where the suggested action is that we review and accept. And this is one again where we can forward to city council with our recommendation to, if we have any amendments to it, which I think might be appropriate based on the historical thing we've done in the committee, but there's not an appetite for that. The motion can so indicate. Maybe.
As student chair, we could collect the comments that we made here, and accept the report, but forward on our comments to the council for full consideration, including regarding the data centers, should the council want to adopt a some kind of an investment policy regarding the types of investment, fossil fuels and the like in the future, at least open the possibility of having that discussion if there were any other concerns about having this policy change.
Okay, that's a neat idea. We can accept after we do some more deliberation here then, and then have a set of comments to forward as well. Or we can cram it all into one motion. So it's appealing to both. I'm gonna need help on deciding this, but I guess I have to look to anybody else have a particular preference with experience in governmental procedure.
I was wondering if it would make sense to bring this back to the next committee meeting or a future committee meeting, taking into account the comments and giving everyone a chance to provide their input as opposed to just sending it directly onto the council.
And that's very interesting because I think we have some outstanding questions on what actually is global infrastructure. We don't have a time limit on these policies. I don't think it might be an annual thing, but got till the, well, I suppose.
This is a tricky one because I've asked the question, but I haven't gotten a response. Certainly with our investment policy, the one that's managed by Chandler, that needs to be done timely. This one does not have a deadline, but unlike where we did sit with investment policy, it ends at the end of the fiscal year. This one might be a bit of a challenge. We've historically taken it to council in the first meeting in December. So there might be a window there if there is a deadline, and I'll have to take a look into it to see if there's no investments that could be done in that window, if there's no policy governing the investment. So essentially sit static. It should
Maybe
investment.
SARS has a comment. That's a great, you might have some experience too. It's Jennifer, right?
Angela.
Angela, sorry, Angela. I apologize.
And that is kind of at the discretion of the city because
Okay.
it's a wide range of how cities and agencies treat their investment policies. So I guess the short answer would be at the discretion of the city. Typically, from my experience, we don't see agencies putting a deadline on these policies as they most often are kind of evolving, which is why we do come out and meet with the city. So not that we encourage it to be changed every quarter, but
Yeah.
there is the option that it is a evolving documentation.
Right.
So that being said, hate to do this, I'll kick it back over to Jonathan.
Yeah, no, I think that's helpful because there's one more question, which is sort of leading me into thinking. There's also some staff comments that you guys may not have had a chance to reflect on. There may be other types of questions like the vice mayor was raising and some other questions here that you might want to include in a report that addresses that. So there is that benefit of more thinking from the internal as well as we could have it as a separate item in a future meeting.
What we can do is include this.
You could also look up what the rules are, whether, I'm pretty sure over the years, I can remember back where we would skip a couple of years before we would look at the policy. That doesn't mean it's correct, but.
We will have that special meeting in the tail end of November, the beginning of December. We can include that as part of that conversation and then take it to council shortly afterwards.
Okay, that, to me, that makes some sense. I'm seeing some nodding of the head. No one's really objecting to that, so why don't we do that? Why don't we table this? The Americans, the British and the Americans use table in different ways. I completely mixed up now because I'm going over to England, so I apologize, guys. But I think table in American means we're gonna take it until, we're gonna put it on the side and not make it, and we're not gonna accept this time. Until we have more report back from city staff, maybe input from PFM and PARS for that matter, and maybe the city attorney. Lots of people can chime in. So do you want to recap what your questions were so it's clear, or do you think it's already been?
I think it's clear. I'm just wondering if we're not continuing the item to the next special meeting. Is that, and do we need to have a motion to that effect? Is that
Good question.
more what we're doing? I'm asking.
Protocol is, Jonathan, we're all gonna look at you.
This is new to me, so
Can we just pass it through that way, so in case, just to kind of cover ourselves, that we are. I know that we continue this item to our next special meeting.
Third second.
I'll second.
Okay, we've got a motion. We've got any comments on the motion? Have we given enough description of what the staff is going to come back with? I think we have it, and staff can reach out independently. That's not restriction, so I think we got it outlined enough. All right, why don't we do that? Let's take a vote on the motion. All in favor? Aye.
Aye.
Nobody opposed, another unanimous. Doing a lot of unanimous stuff, that's very good. All right, thanks everybody for input and more research required. Excellent, we'll move on then to agenda item 7, which is the receive the fiscal year 24-25 annual ACFR update. And I see Sophia there, welcome, and turn it over to you because I don't see a staff report. Thanks, Sophia, for joining us.
Sure, thank you. Good afternoon. Can you guys hear me okay?
Yes.
Thank you again. So good afternoon, everybody. So I'm here. I'm Sophia Ko, and then around the Coupon Group, I'm the engagement partner for the city's fiscal year 2025 financial statement audit. So I would like to give an update on the city's annual financial audit as of now. So our interim field work, which focus on the city's internal controls over significant transaction cycles that we identify, and the field work started in May, and at that time we only had few remaining items to follow up. The year-end audit, which mainly focused on the balances validation. We started the year-end field work around September 22nd, and we substantially wrap up the field work in early October. Our audit manager, who is also on the line, who's Mark Hu, and he actually went on site to the city last week to assist with some final review of audit items and coordination to move on to our reporting phase. The draft report has been shared with the city's management team to verify balances and assist in preparing the management discussion analysis and also the statistical section. So currently, the audit draft report and the audit files are undergoing our internal review, including my review and also our quality control department review. We are anticipating sending a second draft within this couple of days after the review is wrapped up. Our goal is to finalize the report and present it to the audit committee on the next committee meeting, and then followed by submission to the city council in December. But of course, contingent upon completing all the audit open items. So when I come back to the audit committee next time around, I will have a presentation prepared with our audit result and some financial information for committee members to further review and comments. And overall, the audit process went really smoothly. Last year's audit already shows significant improvement compared to the year before, and this year's progress has been even more streamlined and efficient. So we would also like to take this opportunity to thank the city's management team for their strong collaboration and then timely support throughout the whole entire audit process. This will conclude my overview and also the update for fiscal year 2025 audit. I will be happy to answer any questions that you may have.
Thank you, Sophia. Any questions from the committee? I've got one, which is timing of when you're available to make the, assuming the audit is concluded, as you indicated, in a timely fashion. And I think I've been seeing a number of different email suggestions on who's available for what timing. So while we have you and your team and Mark and city staff, maybe we can answer that question. What are we targeting currently?
So we were originally targeting the week of Thanksgiving, and we understand that that was going to be a hard sell, seeing that most people may be traveling, but we were trying to be ambitious in getting the ACFR to you guys as soon as possible. Based off of our initial polling, doesn't seem like that's going to happen, and we're going to have to wait till the following week, which is, I think, currently in the lead is December 1st, which is that third?
December 3rd.
Third, thank you. It's that first Monday in December.
Okay, and that works for you, Sophia, then, if everything comes together?
Sorry,
December,
I was checking the calendar. Yeah, no.
you're checking, I'm actually out of town 2nd through 8th, so
Are
it's
we
not,
sorry, are we talking about December 1st or December 3rd? I thought we are talking about Monday on December 1st.
December 3rd.
We
December 1st, better for me, which is the Monday, but that's me personally. How about let's have some give and take here. Is December 1st too aggressive or not, doesn't work for people?
And the first works for me.
Okay, that works better for me because I'm on a plane the next day. Jonathan, you think it might work?
It will work for our team.
Okay,
Again, as Sophia had indicated earlier, assuming that we're able to finish wrapping it, which all things based off of our projections will certainly be able.
well, so maybe related to that is, are we now with the hybrid structure? Maybe Lindsay's the right one to answer this. Can members of the committee Zoom in nowadays? I know city council can do that, but can audit committee members do that?
Yes, audit committee members can Zoom in. There are some qualifications and things that we have to do in order to make that possible, but yes.
Okay, well, let's maybe assume that's not happening, but if it isn't. So right now, I'm hearing December 1st, I suppose 4 to 6, is that our usual?
I have to get back.
Yes.
We do in the morning if possible.
Will's got a question if we can do the
Yeah,
morning.
you could,
I can do the morning, but prefer the afternoon myself.
What time in the morning?
I can do it anytime up to 3.
Would 1 to 3 p.m. work for everyone?
Yeah, it works for me.
Sophia?
City council members.
Thanks, Sophia. Okay.
All right, okay.
It works.
Let's target 1 to 3 on December 1st. I think Hanyan's gonna get back on his calendar, but let's hope it works for at least a quorum of us and maybe more of us. All 5 would be marvelous, but. Okay, so given that we've got any members of the public, let's go to the oral comment. Lindsay.
We have no speakers on Zoom, Chair.
Okay, thank you for that. We will now move to accept and receive this item. Thank you very much, Sophia and Mark. We're
you.
hereby accepted and look forward to seeing you December 1st, probably.
Sure. Thank you.
Okay. Which brings us to agenda item 8. OpenGov budget format review presentation and finalize. Well, finalize is for the end of that sentence. And we have a staff report, of course, and probably that's Tony or, yeah, Tony.
We have a short presentation we'll be pulling up here as well. So this evening we have a budget format presentation overview. First, we'll have we'll talk about the budget subcommittee, and we'll go into the interactive budget format survey, and then the budget format focus group. We'll briefly talk about some of the enhancements made from our PDF document to the online version. And then we have a brief budget demo video for you. And then we'll discuss recommended actions followed by questions. So the budget subcommittee was formed on July 28th. The committee met 4 times since its creation, and a highlight of their topics include the following. We finalized the budget format changes for both the operating budget and the CIP budget. We also reviewed and finalized the interactive budget format community survey, which we'll go into further detail as well. Also explore the options for budget format informational video, as well as creating the budget format focus group to provide additional community feedback. The interactive budget format survey was open for 3 weeks. And here are some areas of concern that are also detailed in the staff report on page 2. But we did call out here that some areas were the ease of finding information, how reliable is that data, and also concerns about eliminating the PDF document. which leads us here to our budget format focus group. The group met on October 15th. It consisted of 5 community members, plus our 2 budget format subcommittee members. And again, some highlights of the areas of concern related to budget format, or again, keeping the PDF document, how searchable are line items and categories. Also some concerns, whether we can enhance some of the AI options and mobile-friendly charts and enhancing those options as well. Here we'll talk about some of the enhancements from the PDF to the online version. Staff had created an interactive table of contents, which links to all sections of the budget. Also, the financial policies are embedded as PDF documents. We had also included the CIP book into the OpenGov online format. Also created navigation menu pages for departments and divisions. We also had added a CIP and CW, that's Capital Improvement Program, and the Council Work Program dashboards. And lastly, the division summaries were added. That is a new feature. Currently do not have that in our document. Now with this, our budget intern, Alexis, is on Zoom currently, but she had prepared this video to give you a side-by-side comparison of the PDF document next to the OpenGov format that we are transitioning to, or I guess having in addition to the PDF document. And we'll play that for you. It's less than 2 minutes. Oh. Okay. Sure how the sound will work. 1 second.
We're gonna go through 2 ways to navigate here through the publications. Hi everyone, so today we are going to navigate through the new budget publication to get to this City Council program page. The City Council program page is one of the pages here in the PDF version of the budget, and we're gonna go through 2 ways to navigate here through the publication. So first, it would be through the table of contents, also known as an index. And here, if we scroll down, you can see the council and commissions department, and then here, the city council division, and then here to the city council program page. And as you can see, all the information here matches the information here in the budget book. And another way to get to this page is through the menu. So through the menu, you can see a department, and then there's options to click on all these departments. Then here, if you go to council and commissions, it'll bring you to this menu page. And from here, you can see all the different divisions and programs within council and commissions. And since we want to go to the city council program, we can just click here and see that it again brings us to this page.
That was it for our demo video. The last piece here is, I believe we are just going to review the recommendations of tonight's item. So tonight, for your consideration, we're receiving the budget format review presentation as outlined in the budget format implementation action plan for the following recommendation numbers. And item 2 is to finalize the OpenGov budget format for recommendation to City Council for their consideration at the November 18th council meeting. Next slide, please. Um, that reiterates what we just discussed in the previous slide, but these are the next steps. If you are to approve the item this evening or to forward to finalize the recommendations, then it'll go to council in November.
Great.
At that time, we'll take any.
Thanks, Tony. Why don't we open it up to committee clarifications? Anyone have a question? I have one clarification. The vice mayor and I were the subcommittee that was referenced here in case Will maybe was looking a little puzzled.
No, not at all.
Any questions on the presentation?
I didn't have a question on the presentation, but just in terms of public interest, how many people attended the focus group? How many responded to the survey?
We did have 10 that signed up. We did have 5
for the
for
survey.
the focus. Oh, but sorry. For the focus group, there were 10 that had registered, but there were 5 that attended. Plus 2 subcommittee members, so there were 7, but there should have been like 17. Or sorry,
So it's
no,
8%.
12, sorry, I'm counting extra people. Yes. 5 did not attend. As far as the survey, we had 18 respondents.
Thank you.
Any comments? Okay, I would like to thank city staff. We did have 4 meetings, but it felt like there were a lot more. There was a lot of material covered and a variety of participants, and of course we want to thank Alexis for her participation in the project. But why don't we move on to public comment? I saw one flash on the screen. Guessing we've got is there only one, Lindsay?
Yes, we have one hand raised on Zoom share. Welcome, San Rao.
Yes, thank you, Chair Schmidt and committee members. I was a member of the community outreach session that occurred. Thank you for having that, and hope to see many more. I did not see any discussion on the cost of this implementation. So is the city going to have to pay OpenGov additional license fees in exchange for the availability of this OpenGov stories feature? I think that's an element that I would like to see discussed. I would oppose any additional spend on OpenGov for this feature. As I have spoken before, I think for someone that is from the financial background or is used to reading budget formats, reports and budgets have a standard format, and these OpenGov stories are non-standard formats that don't necessarily match standard formats. And so they tie us artificially into OpenGov. Should we want to change in the future, it requires an additional transition. I also do not see OpenGov currently being mobile friendly. I was told it will be, but the study that was done, it was not. Perhaps it was because of image usage as opposed to actual data. But I'm concerned that we're spending an inordinate amount of staff time on this feature study. And the question I'd have is, if staff were not doing this feature study, what would staff be spending their time on leading up into the budget session? And what is the opportunity cost of this transition to this feature that is taking away from some other item that our finance staff could be spending time on? Obviously, if there are areas that needed improvement, such as reporting in certain departments, maybe breaking out the senior center into its own fund as opposed to being the general fund, maybe looking at better reporting on the safe routes to school or other such areas. I'd like to see where we could be using staff time instead of this OpenGov features, because it really isn't adding much value to someone that is used to reading PDFs for financials. I'm also concerned that the menu of stories may be a subset or may not report out on all of the potential areas. And while the PDF is retained, I think what really matters is what council will be presented during the actual sessions, because the narrative and the document that they focus on is what will drive the discussions. So while the PDF may be somewhere out there, if the council is not looking at the PDF, then the discussion kind of drifts into what the stories are. And the stories may be a subset and may limit the discussion. For example, there may be no story on the senior center because there isn't a fund on the senior center. So I just want to leave you with that and urge you to use your judgment and frugalism and frugality in not spending city dollars on some fancy feature. I'm in the industry of building features, and I know that many of these features are fairly useless. And so I urge you to
Thank
be
you. That is
minimalist and
your
frugal.
time.
Thank you, Sam. Yeah, I don't want to make this a interactive, but as chair, I do want to make some comments. I feel like this is, we look at as one of our municipal code involved action items is to look at the format of the budget. So I want to first clarify that we look at the format, and then second context is that there has been a consulting study that was underway, put underway, I don't know, a couple years ago, that maybe we could reference, maybe this is a good chance to remind ourselves that the Baker Tilly study is a very good context that maybe many others from the public would have a similar type of familiarity with that process that was put in place. But I think that document, if we can reference it somehow conveniently and possibly just send it to Sam, but I think provides a lot of answers. And I don't mean to get into a give and take, but thanks again for the comments. Why don't we move to, well, our action item here is actually this time to forward, I guess. Well, sorry, I'm not, as we get late in the 2-hour meeting here, finalize and then format for recommendation to city council. I think we are looking at an action item of recommending the staff report forward. So why don't we focus on that as a motion, and then we can deliberate some more on that motion.
More so moved. And I would like to add that when this report goes to council, you're referencing the budget format. Perhaps if there were some more information about that in the staff report, about what the genesis of this is, I think that will answer those questions and provide those details.
Is there a second to
I moved your.
maybe you can simplify one more that or
Okay. I think you can work with that.
okay, perfect.
That's perfect.
So a second. Perfect. Will is seconded. Great. Yeah, I like that idea a lot because a lot of these acronyms I struggle with. So IAP, I figured out what that is, and that's in here. But just not make light of it. There is a lot of budget acronyms and reasoning. It's not like our subcommittee suddenly came up with this idea. So I think there's context there. And members of the public have some great insight and the idea of, was this costing more? I think we did cover that. I don't want to go into a lot of details on it, but unless city staff has some comment top of your head, but OpenGov is a module that the city's had for a number of years now. And as I understand it, this is an add-on that's not costing a lot, but that is a great question to ask.
It is already included.
It's already included.
Already.
So excluding staff time, which of course is a big element here. And so any more questions on the motion? I might think of some more while we go around the table, but
my only suggestion was that in the staff report use not so much a history, but that this is state that this is really the first phase in implementation of these recommendations that Baker Tilly. And why did you pick 15, 17? There's more to come. So if you could just read history and plan for the future.
I think that's very helpful because again, we forget all that history and certainly that would be helpful in one document in some way if it's possible. I'm not sure the demo, I mean, I really appreciate the but I'm not sure it does justice to maybe the OpenGov. Are you envisioning moving like a live session that the vice mayor and I saw when it goes to city council? Or
Yeah. I believe the intention for this video was to show everybody what we've been working on so far, but we actually are going to be creating another video in collaboration with our video team.
I think that would be very helpful. Okay, well. Shall we vote? All right, all in favor of the motion? Aye.
Aye.
I see another unanimous passing here, so exciting. Now we're on to our agenda item number 9. Where are we time-wise? Oh, we got a little bit to finish this one up. So we got received the proposed audit committee 2025 schedule and work plan. And we have a presenter here, our illustrious finance manager.
Thank you. So we now finalize what date we're gonna be meeting on our December special meeting in December for the 1st. So included in there is the part from the ACBR review. We also have the revisit the 2026 work plan for the audit committee. In addition to that, and we just touched on this earlier, is to continue the OPEB and pensions policy update. So, and then shortly after that, likely with that meeting, we'll forward the ACFR and the policy to council in that second week of December, which is, I believe, the 16th.
Very good. Thanks for making that presentation. A comment from me, there's a lot of, we're really talking about this year's work plan, but it's useful that next year often looks similar to this. And I gotta thank finance manager for having, I've been involved in this committee for many years, and without, this may look very simple to people, but it's very helpful to get an idea of where we're going. And amazingly enough, this isn't so easy to come up with. So thanks to that. Any more clarification questions on this element? Everybody's copacetic here? All right. Well, I'm going to, let's see, we're going to just accept that. We have hereby received it. Thank you. And now we've got some more stuff like staff and committee reports, which we've had a bunch of already. I don't see one there. I do have something to add on the committee member attendance at upcoming meetings and events. There's 2 things. One, of course, we've got Wednesday, where I already know many of us are going to be there for the Community Service Awards. So look forward to seeing you. Some of us have travel commitments, but the second thing is I want to call out the vice chair who's been stepping in for me, and the mayor separately has meetings with commission chairs, and I think I'm going to miss the 3rd one in a row here, but you're available, I think, on the 19th. So yeah, vice chair has stepped up to make those meetings when I'm unable to attend in person. So thank you for that. You're welcome. Anything you want to report on the previous mayor meetings that you attended? If anything comes to mind.
The last one was an interesting one that we were actually kind of voting on the Crest Award. Yeah, and the mayor was very, very nice to actually start a meeting with some treats that she brought from.
Excellent. Yeah, I remember the treats. That's a positive in those meetings.
That should be a lesson for you, Jeff.
I missed out on my treat.
It's best practice.
Right. But I guess it's in the context of there are things that the audit committee does, like there was a subcommittee, and I look forward to, now that we've got 5 members and I'm looking to this side of the table, but I hope we can get more involvement in subcommittees and spread around the wealth next year. Okay, any other comments from Vice Mayor?
I'm excited for all the work that our interns have done this year. And it's been great. Thank you so much. Really helped move things along, especially with the cash flow policy. We've been waiting on that, so I'm really excited that happened. And that we've got this budget format moving along as well. It's pretty awesome. Thank you.
Good. All right, future agenda setting. I don't see anything there. We usually handle that, but okay. We are hereby adjourned. Thanks, everybody. What an exciting afternoon.
Okay.
Oh, do I get to do this?
Yes.